Greetings, members one and all of the Salivation Nation, with some fake news. Gold prices drop after 4.8 million U.S. jobs created in June. Now, you're probably thinking that from the employment side. We'll look at that momentarily. But I'm talking about from the headline. It should say gold futures drop after 4.8 million U.S. jobs created. We had this happen the other day as well, too. I wish it would be more clear in their headlines. But nonetheless, this comes to us from Kitco about the job market. Some good news. Hopefully, let's explore. That's right, the gold market is under pressure. At least the gold futures markets are. But what are happening about the real prices? Let's pause right now and take a look at what the prices are, because gold is up. That's right, gold is up after this news. It is up to $1,776.80. Quite apropos, because it is on this day, July the 2nd, in 1776, when the Declaration of Independence was signed. And that's the official date, believe it or not, because it was on July 4th, even though it's dated July 4th, that was when it was released to the public. And that is the release date for the Declaration, although July 2nd is the actual date of independence, when everybody got together and said, hey, 56 people said, we're going to put our name to this document, declaring for our sacred honor and our lives and our sacred honor for this idea of America, which was an experiment that has paid off for the whole world today, actually. But that, I digress in that aspect. But gold prices are up, and it's pretty amazing considering what's happening here. The gold market is under pressure, falling below critical initial support levels following stronger than expected labor market data for June. Gold prices are hovering around $1,780 an ounce Thursday, after the Bureau of Labor Statistics said 4.8 million jobs were created in June. The data significantly beat expectations. According to this consensus forecast, economists were expecting to see job gains of around 3 million. Keep in mind that over 1 million jobs were lost. In other words, there was over 1 million new applications for unemployment, and these are for June, before these latest surge of coronavirus cases. August gold futures last traded at $1,773 an ounce, down 0.39% on the day, an initial reaction to the employment numbers. The unemployment rate also fell more than expected, dropping 11.2 to 11.1%, according to the consensus forecast. Economists were looking for a reading at around 12.4%. The unemployment rate is down sharply from the April high of 14.7%. So that's good news. But we were fooled by this before, because I posted a video very excited about this news. And so I'm not quite as excited this time, and I'm not taking it word for word from media news sources. So we're going to go to the actual source itself, the Bureau of Labor Statistics, the employment situation summary. It really breaks it down. A lot of these were due to the service industry. It was where this stuff, we'll kind of look and see what's going on here. And because really, essentially, these are jobs that are coming back. They're coming back to work. So these were jobs that were on pause, and they are back now. So it's good news, but it should be expected news as the economy is opening back up again. This should be expected, not necessarily considered great news, although these recoveries are better than expected, sooner than expected. Let's see what July numbers look like, but that's taking it on the surface. Let's take a look here. See, the unemployment rates decline in June for adult men, adult women, and teenagers, whites, blacks, and Hispanics. The jobless rate for Asians changed a little over the month, and it talks about temporary layoff. The number of unemployed persons who were on temporary layoff decreased by 4.8 million to 10.6 million, following a decline of 2.7 million in May. The number of permanent job losers continues to rise, increasing to 2.9 million in June. The number of unemployed re-entrants to the labor force rose by 711,000 to 2.4 million. Re-entrants are persons who previously worked but were not in the labor force prior to beginning their job search. A number of unemployed persons who were jobless less than 5 weeks declined by 1 million to 2.8 million in June. So it breaks it down a little bit here, and it talks about the number of persons employed. Let's take a look at the types of jobs that were here. And persons marginally attached to the labor force subset. It goes into detail about what this is about. And let's see, the coronavirus pandemic in April, non-farm. Employment in leisure and hospitality increased by 2.1 million. So that is the big news here, which means that essentially those sectors which were hit the most are starting to come back now, and it makes sense that they're going to be coming back, accounting about 2/5 of the gain in total non-farm employment. Over the month, employment in food services and drinking places rose by 1.5 million. Now, keep in mind, some of these were paused for opening. Bars have been closed down in some of these bigger states in the Sun Belt, and so that is a factor here. But moving ahead down here, we can see there's other factors in this and in these data here, but this is where we want to get is the impact statements down here, because the coronavirus impact on the establishment and household survey data is something to keep in mind, which is unique now that we've not seen before, which is why we are cautiously optimistic about these numbers, because it could be revised because of this COVID situation, how the data were collected. But here is the one statement. The misclassification error that we saw before, it declined considerably in June. There we go, folks. This means that we can take these numbers at more face value than we could last time, even though some commentators, including some that fall in line with my ideological perspective for last month's May numbers, are continuing to tout the huge increase that we saw, not take into account the misclassification error. This time, I want to be as intellectually honest as possible, but also be cautiously optimistic. So the degree of misclassification declined considerably in June. BLS and Census Bureau staff have been reviewing survey respondents that might have been misclassified. The misclassification hinges on a question about the main reason people were absent from their jobs. If people who were absent due to temporary pandemic-related closures were recorded as absent due to other reasons, they could have been misclassified. When interviewers recorded response to other reason, they also added a few words describing that other reason. The review of these brief descriptions found that the share of the responses that may have been misclassified was much smaller in June than in prior months. So there you go. I think that's good news. So I think this is something we can be more optimistic about, but I'm going to still say cautiously optimistic, because we are seeing some shuttering down to some degree of businesses now due to coronavirus for one reason or another. You know, there's different theories and philosophies out here about how we should deal with this. You know, some people think, well, all these shutdowns were not meant to stop the virus because of the very nature of what a pandemic is. We just need to let it run its course. But there are some aspects of the disease that are scary, and so we want to try to keep as many people from getting it as possible, especially considering that there could be potentially long-term effects of this thing. If it was just a regular flu, it would be one thing, but the fact that some people are dying from it, some even younger people are dying from it, causes another aspect of fear as to why people are acting the way they are. And it's understandable, I believe, in that regard. But make no mistake, you know, we can't close down the economy forever. And sooner or later, we have to find a way to make things work. They're getting better treatments and stuff for this now, which is good. There's some hope for a vaccine. We want it to be safe. We want it to be effective. We'll see how that plays out. People have different feelings about what a vaccine could entail, understandably so. The way the numbers are being reported, people have questions about, understandably so. Make no mistake, the whole way that the market is reacting is really what this channel is about in terms of gold and silver. But make no mistake, here we are, and what's going on there with the numbers, and how we have a perspective now, taking that deep dive into the actual source here. These improvements in the labor market reflected the continued resumption of economic activity that has been curtailed in March and April due to the coronavirus pandemic and efforts to contain it. The report said in June, employment in leisure and hospitality sharply rose, as we saw. When June's job gains are the biggest on record, the labor market still has a massive gap to fill after more than 20 million jobs were lost as the economy ground to a halt because of the coronavirus pandemic. With the gain in June, payrolls have only recouped about a third of the jobs lost over March and April, said Andrew Grantham, senior economist at CIBC. In its revisions, the report said that April 20.8 million people lost their jobs that month, up from previous estimate of 20.7 million. However, May's unemployment data was revised up 2.7 million jobs created compared to the estimate of 2.5 million. So that's another interesting factor. The misclassification, that was all taken into account and was revised upward. Although June employment was better than expected, creating more hope for a sharp recovery from the economic devastation caused by the COVID-19 pandemic, Grantham said that there was still a lot of uncertainty in the marketplace, and that, I think, is why gold is still up and actually going up today, and silver is down below 18. Michael Pierce, senior U.S. economist at Capital Economics, also said that he expects future job growth to slow as the virus continues to spread unabated. While the headline data was stronger than expected, some economists note that wage growth is a concern. The report said average hourly wages dropped more than expected in June, falling 1.2% or 35 cents to $29.37, down compared to May's drop of 0.8%. The decrease in hourly wage earnings largely affect job gains among lower paid workers. Yeah, employers are nervous. They don't know what the outlook is going to be overall, so they're not going to be paying people or giving cost of living increases either, which means that essentially people's income is going to devalue because inflation is going to continue. And inflation is the thing we got to watch out for as they move forward here. Looking at the mining sector, the report said that 10,000 jobs were lost last month. However, most of those jobs were in support activities. Mining employment is down 123,000 since a recent peak in January 2019, although nearly three-fourths of the decline has occurred since February 2020, the report said. The employment data is being released a day early because markets and the government is closed Friday for the 4th of July Independence holiday. So there you have it, folks. And that is where we are at. And but gold is up, and silver is down slightly. And actually, all the other metals are down, save for rhodium is up $100. But I think people are still concerned. And where does that concern reveal itself? In gold as opposed to silver today. And why? Because gold is the ultimate safe haven. 1776. Get your freedom in gold. Stack it. Hold it. And who knows? I'm still bullish on gold, and I'm still bullish somewhat in silver. In fact, silver is actually now back up over $18 in the ask price, but it's below $18 in the bid price, down a dime. So there you have it. There's the news and a pretty deep dive into the employment situation. Cautiously optimistic. Looks like the revisions from last month are up even higher. So that is good news, because jobs are the biggest thing. Because if people have jobs, they've got money. They got it to spend, and we are seeing that in concert with the consumer spending increasing. And places I've driven around the past week locally here, I'm seeing more activity out at restaurants and other places, people eating outside. It's encouraging to see. The American people are resilient, so I'm cautiously optimistic, and we'll see what happens. But I pray for anybody and everybody who's had to deal with this COVID-19 situation, whether or not you were directly affected by the disease or by the economic impact thereof. So thanks again to everybody for taking the time to listen. I'm going to encourage you to post your thoughts in the comment section below. extending a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.